Hello and welcome to a Pathfinder tutorial video. In this video, I'm going to show you the basics of using the Pathfinder indicator on the 1 minute time frame and how you can use this in order to catch some very large trades and hit your daily goal without having to pay for any lower time frames or the premium subscription on TradingView, but you can trade right on the 1 minute. And I would suggest that you use this as a basis for understanding what's happening in the market. If you are trading on lower time frames, you should be looking at this first on the 1 minute time frame in order to see what's going on. So to start out, we're going to go ahead and cover the indicator here. I'm on 1 minute and I'm on micro, E-mini, NASDAQ 100. This is the main pair that I trade, and I mainly trade micros. Now, the indicator itself is going to consist of a few parts. There is a line here that you can see is blue, and we call this the basis, okay? And the basis is similar to what you would consider a trend line, except the basis is dynamic. And what this basis is using is it's creating dynamic support and resistance as the market moves. It's registering where the support and the resistance are, and it's showing you with these flat levels here where those levels are in the market. Okay, just like that. So you'll see it goes from moving to flat, moving to flat. And your best entries when things are moving are going to be when price touches the line. You'll notice that it's like a magnet. It pulls back to it and it bounces off of it when it's in a trend. When it begins to slow down, you will notice that it begins to reject that line. Okay? So that's the first piece of the puzzle. This is called the basis. And you can see here, it's blue here. And back down here, it's red. So red is for bearish trends or the market moving down. It means we're selling. And blue means for bullish trends or the market is going up or buying. So that's the first piece of the puzzle, is the basis. Okay? That tells you what's going on in the market. If it's blue, you're buying. If it's red, you're selling. Very simply put. Okay? The next component of this is, of course, the most important part, and that's your actual candles. And our candles are different because they are colored very specifically to show the trend as well. So when the trend is bullish, you'll see they're nice and blue. And when the trend is bearish, you can see they go blood red. So it gives you that visual cue. Now, when you're in an uptrend and you get a big pullback, you will see that the color changes briefly. The basis stayed flat and blue, and then the market continued. Okay? So even though the color changed, our basis stayed flat, and then the market recovered and continued to the upside. So that's our second part, is we have what are called gradient candles. Now for the third part, because your basis tells you direction, your gradient candles, it's kind of like a heat map, if you will. And then the third point is reversals. Okay? You need to know where the reversals are in the market. And so what we do is we do this dynamically in Pathfinder. So this market is moving up here, and you had 3 levels that were potential reversals that the market did not actually reverse from, but it did give an attempt. This was the first one, this was the second one, and then this is the third one, okay, which you can see is much closer together. So we're going to cover that right now. The line that you need to be paying attention to is your white line, okay? This is your white trend line. And that extends right by default about 50 candles, okay? As long as your price is staying above that level, you are in a what you would consider a strong uptrend. So you can see these previous levels, the market pulls back and continues, pulls back to it and continues. So even here, it doesn't quite reject this larger level. These smaller flat areas weren't even enough to trigger our white line, so you wouldn't have had to worry about that. So you're still in an uptrend here. You can see here, no problem, it stays up. And then right here, this white trend line, the market is now coming down here. We see it starting to go red, so that's considered for caution, especially after you've already been red before. And what you're watching for is you're watching for the market to close below that level on your 1 minute candle. When that happens, at that point, you are at the very least in a deeper pullback, but you are likely at a level of sideways to reversal in the market because it is no longer respecting that. So the trend pattern that you had has been broken, and that really is the key point, is there was a pattern and the pattern is broken. Now, when you combine that kind of knowledge with, for example, simple trend lines like you had learned before where the market's going and the market is making higher highs in the market, there's a pattern break, it starts to slow down, and you can see this market from these levels, you can see where the market starts to break and go into a different pattern here before reversal. Now this is at the end of a day, and this, what you're looking here, is the third most bullish day in history. So this is going to look pretty wild. But literally third most bullish day in the stock market since World War II. So this market here, we're watching you until this point, you would have been taking buys. Now when you see this, now you're looking for sells in the market. Okay? Now if you were in a buy and you had held through the entire thing, this is where you would be looking to exit full and get out of the market. Of course, by this point, you had already hit your max daily stop out and profit. You wouldn't even still be trading at this point. But if you're in a smaller move and it does this, you're likely going to look to get out of the market, okay? But at the very least, we're looking for sells. So this market now, once it gets below that, the line will still stay blue until the basis points down. Once the basis points down, that's our selling confirmation, okay? Now, this is very important. Before that happens, there are actually entries in the market to take an initial position, which would be your most profitable position of the entire day. And you can hit these about 3/4 of the time to be able to hit them and have a tremendous move in the market, okay? And what I'm going to show you right now is the easiest way in order to identify that, okay? So once you see this and the market closes below your white level, you're going to look, this is your trend ray right here, okay, the white line. Once it's closed below that in an uptrend, you're looking for sells, okay? And we'll cover buys in a minute. So you're looking for sells. There are several possibilities where the market could come back to, okay? The first possibility is the market may only come back to this level and it might throw some candles with wicks here before continuing down, okay? So that's from your basis to your actual trend ray where it broke. That's the first level, okay? So we'll press play on this and we're gonna mark up a couple levels. What I want you to also do and consider, because you'll see this one wicks right here, you wanna wait for multiple confirmations. That did not give you multiple confirmations. We don't see this pushing away or anything, we see it closing above. So when you see this, the market has pushed below the low, the white trend, it's made a low, and then it recovers. The easiest way to give yourself a really good position for a sell at the highest possible point, and what I'm about to show you is so simple, but it can make you so much money. What I want you to do is just simply take your measuring tool. I want you to go to the highest point in the market before the market shifted down. So that's the high. Go there I want you to draw your measuring tape, drag it down to the lowest point before the market came back up to close over the white ray and the blue basis, which would be right here, okay? And extend that right. That price right there, 19,335, is what we call a sweet spot. It's 50% of the way between 19,384 and 19,286, okay? Which this is 393 ticks. This is no small joke in this market on the 1 minute, okay? So that is your potential level right there. Now, if you want to, what you can do is you can create a horizontal ray and just extend it right on that line, okay? So this is your potential selling point. Your other potential selling point is what we call a head and shoulders pattern, and it would be based off of your previous high over here before this one. So a head and shoulders pattern, the market would come to here, okay? This is head and shoulders. What that means is, think of it like a person, okay? Person has a left shoulder, a neck, a head, and then it comes down, and then this would be the right shoulder, and then the market would drop from there potentially. So sometimes the market does that. Sometimes the market does it from this level right here, which is the basis. And sometimes, if not most of the time, it actually does it from the potential selling point right here, which is 50% of the way from here to here. Now, sometimes the market even comes up and makes a double top before continuing, but typically that will happen before you have crossed over your trend line. So it happens during the upward trend. It fails to make the high, makes an equal high, and then it comes down. So that's where the market from like right here would have recovered, came here, and then it crosses below. Or it might have come here and come up to this point, and then it crosses below. It doesn't quite, fails to make a higher high, right? Which is what happened here. So now this is our first cue that a market reversal is potentially happening. And until this point, you do not ever click the sell button. You are not looking for sells, you are looking for buys until this point happens when the market candle closes over the white ray, okay? Now you are looking for sells. It does not mean that you enter immediately. Although if you do, you can take a small position and add later in case the market just doesn't come back to this point. It just drops away. But most of the time, it's going to give you a pullback entry to that 50% level. Now, there's an advanced way to do this with Fibonacci, but for right now, I want you to understand the basics of just take your measuring tool, go from the high that came down before the drop, into the drop, to the low before it comes back up into the market. So from the high, drag your measuring tool down to the low, and that's where you place that ray, okay? So this is the 50%, we'll just call it a pullback, okay, for easy terms. The market has moved and it's pulling back. So this is a 50% pullback level, okay? Now let's watch and see which of these three does the market come back from. Does it go from our basis? Does it go from the 50% pullback or from the head and shoulders? Let's press play and watch. And right here. So the market initially rejected from this level, came higher, which is why you don't just have your stop above the level because you'll get stopped out frequently, okay? This market looked like it was gonna go down, psyched you into a sell, turned around, came up, hit your stop loss here. And some of you know what I'm already talking about when you're watching this video, but that's not you. You know that the move is coming, right? So you're patient. This move comes back up to the 50. It did not just wick off of this ray right here, okay? And it did not come to the head and shoulders pattern. It came to where it normally comes to, the sweet spot. That's that 50% pullback, Okay, so the market comes and it wicks off the 50%. Ladies and gentlemen, when you see this happen, where the market has, number one, gone from a high and crossed down over your white trend ray, and then you make that measurement, you make the measurement right here, top down to bottom, and you see this market come back to that 50% level and it gives you a wick. Okay, this right here, this is your Todd. This is the trade of the day right here. This is the trade of your day. Okay, now I'll show you what I mean by that. Okay, we'll go back here. Here's your wick. That right there, I want you to study this over and over and over again, because this is going to make you a lot of money in the market. That 50% wick pullback right there is your entry. When you see that and that candle closes like that, I want you to get on your position immediately without delay from that 50%, okay? That is your position. From there, this is with 5 contracts. So on 1 minute, you would trade 5 contracts here with a 150K account. You have a sell confirmation. And this market begins to move. This is your move of the day. Now, you are now in a bearish trend because you can see our basis is moving down. That's where the sell confirmed comes in. It begins to move down. It's confirmed. The market, boom, starts to drop. Now you have a new ray. As long as this stays flat, and you stay below that, you are in a downward trend. Market gets back below and continues down again. You're now at $2,000 profit. You now have a new white ray that is tracking the trend, and it's showing you where the last major orders were that moved this market down. Now right here, this is very important. This market is still flat right here, but there's a small discrepancy, a very small discrepancy. My suggestion to you is when they are a tiny discrepancy in price, that you ignore those. That's my suggestion, because more often than not, it's actually the same level and it remains valid. Market continues to move down. Now you have a new level. If it were to close over that, you would be done. And again, you can stay in these trades until you hit your target for the day, which you're now at $3,000 at this point. And this is from 8 o'clock at night until 11:24 at night. Okay? So this move is 3 hours and 21 minutes. You're probably fast asleep at this point, snoozing and sleeping well, knowing that you're making money no matter what. Because you can also be trailing your stop loss down. Every single time you get that new white line, that new basis that comes down, you can stay above that level, especially when you see this move down from that level. So you can secure those profits. Each time you could have come down to here when this one formed, then this one formed, you could have moved down to here, and then you could have moved down to here, okay? And so no matter what, you're making money at this point. But depending on what your goal is for the day on your accounts, you would have hit your $3,000 goal if your goal is $1,000 per 50K. So 150K account, you would be very close to making that full amount with just 5 micro contracts. Right there, this market finally closes over the white line. This is different than a small discrepancy. This is actually valid. So you have a white line, a push down, new trend line, and then right here, that market is kaput. It is done, and you are target hit right here for that final amount right there of $3,000. Okay, that is your final move. All because you allow these trends to happen. You allow the pullbacks on the 1 minute. Everything stays valid. You don't get psyched out. There's no freaking out. There's no emotions. You're just allowing the trades to happen so that way you can capitalize on these moves. Okay? So now let's cover let's see if we can cover a blue shift, okay? So from there to there, by the way, that was a total from your entry right here. That was a total of 1,185 ticks in the market. That is a tremendous move. And that was on one position. That was out without any added positions in the market. There are other ways to add positions here where you can measure every time a large wave happens and you get a pullback roughly to that 50. You can take additional positions in the market. Okay, so there's other ways to do that that's more advanced. You can also add with your HyperTrader. Once you have HyperTrader unlocked, you can add on your positions, and you just go with it until the trend invalidates, which happened right here. And we see it also formed a double bottom where it bounces off the same area twice and then crosses up. So it makes sense that this would be the shift. All right, so now going with this one, we can see here that the market has gone from a low. It has crossed over. It's crossed up and over the white ray. And now what you're looking for is a pullback down to your ray, okay? So we're gonna go and get our little pullback here. See where that, right there, okay. Once we have that level right there where we have we technically have a low right here. So we go to that lowest point, we go to the highest point, we mark it up, and we'll see if it's going to be that one or this failure to make the low here, okay? So that one would be right there. This is, again, the sweet spot, okay? That's our sweet spot. All right. Now look, let's mark up this one too. Why not have both, okay? So I'm gonna go from the low to the high because the market is crossing up and over, and that's my first sign of where the market potentially wants to reverse. So I have my sweet spots here, okay? Now I don't know about you, but that wick right there looks awful close in between these two sweet spots. Beautiful wick right there. And if you remember, for the sells, we were looking for a bullish candle to do that. On the buy, you're actually looking for the bearish candle to do that, which this fits that description perfectly. It's even wicking the basis. So we like this. Let's take that buy entry here. Our next candle here was a doji candle, but I would have entered immediately upon the close of this, okay? Where is, with 5 contracts, we're actually well under leveraged here. So that last trade, we were also very under leveraged because we should be willing to risk $1,000 on these trades, okay? So I should be risking 1,000, and the market should not be coming and making lower lows. There are some more technical stops in here where you can get out sooner, but this is the one that we'll use for now. So I'm looking to make at least $3,000 to the upside, and $1,000 to the downside. That also, by the way, would have made this trade a $6,000 trade versus a $3,000 trade. So depending on what your daily goals are, you're getting hit on those. And this is at nighttime, by the way. So let's see. This is now at midnight. This is now at midnight. So let's see how this trade plays out. That would be an entry there, and we'll see what happens. Does the trade go to the upside or to the downside off of our sweet spot? Here we go, buy is confirmed. And once this goes flat, our white ray will shift. There we go, so the white ray has shifted. And what do we see happening here? This market has now closed below that white ray. And at this point, I would probably listen to the market. I would highly suggest you probably listen to the market on this one, as it is closing below. Okay? So at worst case scenario here, if that had closed below and you decided that you were going to get out of that, at that point, you would have only made $140. That's the worst case scenario there, if you had decided. Now this market could continue to the upside, but I wouldn't bet on it. That right there would be my exit. This one did happen to turn around. Looks like it rejected right off of these same levels and continued to the upside after that little rejection right there. So there you have it. That's a big move in the market. But where this had rejected right here, you have two options. And I do want to emphasize this, okay? Because this is something to consider depending on your trade style. You could exit this immediately if you want to. If you do not want to, and if you were to mark up just like you were going to mark up a sell, which would be from the high crossing over the low, which was right here. If you were to mark up the high crossing over down over the white ray, if you were to mark that up and you saw this, you probably would be interested in this. This would catch your attention, okay, as a potential continuation to the downside. Now, this for me would not be bearish yet. The reason being is that there is no selling confirmation. I want you to notice that that basis stays totally flat and never does it point downwards. Instead, it begins to point upwards and it resumes its tracking to the upside. Here's our ray. And the market continues until there. At which point the market does close below right here. Okay, but by this point, you've already hit your target if you had stayed in that. So you have two options. You either can play it very safe and exit upon this market closing below that white ray, which was right here, or you can stay in and say, you know what, I'm risking the money, and I see where the buy is, I see where the buy level is, and the market has respected that so far. And this has stayed flat. Your basis has stayed flat. That is the important part. There's no selling confirmation. In fact, the market recovers back up above it again. And that right there should tell you, hey, probably or maybe re-enter in here somewhere, okay? Depending on if you got a hyper trader signal or if you see another parameter for entry here. You could take another entry. So that's the basis of how that works. Again, it's paying attention to where that white trend ray is, because on your trends, it should be respecting that. If that's not happening yet, it means that you are in the deeper pullback or the market is still shifting and turning, and so it's early. It's early in the trend, okay? So it's still able to pull back in here and potentially consolidate a little before it makes a decision. Which it does, it consolidates before breaking out to the upside right here. That will happen early on. If that happens later on, you should be getting out of your trade, okay? So that's what that is what a buy looks like right here. Here is your buy level. And again, just to reiterate, the market has come from a push down, made a low, pushed back up over your trend ray, which is white, and it starts to pull back to your basis, your trend ray. So you take your measuring tool, you go from either low in this case, but you go from here, and when you get those wicks at that 50% level, that is your entry for the buy to the upside. Now, it can test multiple times, okay? It can test your level multiple times, and it may even push a little lower than it. It does not mean that it is not valid. It does not mean that it's not valid. It is still valid, okay? There is a level in here which is more advanced that I'm going to teach on another video, which would give you the first cue or the first warning sign that you're early to a reversal or it's no longer valid and the market may need to make another flush lower. Right now, you don't need to worry about that. For right now, All you need to do is manage your accounts correctly. And when you get these reversals or the rejections, sorry, not the reversal, but you get the rejection from that level, which was 50% of the measurement, you need to know when you enter, you're looking for at least a 1 to 3 risk to reward ratio. And you should know, if you look left and you see a large cluster here, price should not be getting below that cluster. If it does, it's going to make a lower low. Give a possible hunt for stop losses down here. And it is possible you could get stopped and then the market will turn around. We'll cover that in another video. For now, you need to know your basic initial Pathfinder entry. You need to understand the market structure of the way that it moves and continues to make these flat spots, which show the actual support and resistance levels as covered in support and the dynamic support and resistance video. Again, dynamic support and resistance. And we want to see when that breaks for the likelihood of the reversals. This is the start, and these are the best trades in the market that you will ever get if you have the patience to set it and forget it and hold those trades. Okay? So that is an example of a buying, and that is an example of a selling. Now, let's go and just look on the charts, and let's go ahead and just see some of these play out so you can gain some confidence on how they actually move in the market, okay? So let's see, did this one give us, let's see if this one gave us one, okay? So I'm going to go replay right here. Right here, the market has broken the low. Okay, this is a bigger move. The market has broken the low. If I go up to the high of the market and I bring it back down to the low, this is moving quite a lot farther than that initial 50% here in the market. But it remains valid for the selling still. So it's actually still valid for the sell. You can see there's a new trend level here, and it is valid for the sell currently. So let's see, let's exit out of this completely so that way we can see. Let's take a look at this level right here. This might be a deeper pullback. Let's see what this looks like. Okay, perfect. So if you were at the market and you were seeing this, you can see the market has gone from a low. The market has pulled back. It has closed over the high. It pushes up, comes back down to the basis. I'm going to take my 50% tool. I'm going to come here, and you would be looking for rejection from this area, sometimes slightly lower. Again, if the market is rejecting it going, it may retest more than 50%. Like I was saying, there's multiple levels in here where this could reverse some. So let's say that you entered from, let's say that you entered right here from this point. On the market. Here's your 1 to 3 right here. And then let's just throw that 50% back up there because that's where you're potentially entering from. And market pushes a little lower, stays valid, and begins to rise. Until right here. Okay? So you had all this opportunity and area in here for profit. How far did that actually get? This gave you a 1 to 1.5 risk to reward ratio. Did not push beyond that before closing here at this level. There was a potential level right in here where you can see this discrepancy, where this almost goes flat, that the market potentially actually gave the reversal from right here to the downside. So these are things that you will learn to spot later on. But right here from that 50 entry, where this was, which also happened to be at that basis, It flushed a little lower and then gave some profit to the upside. So that right there is a winning trade to the upside. Let's take a look at some more. Take some look at some sells here. This one would be complicated because there was news at 8:30. So this is a little challenging because of the news, but there were some plays in there. This one gave no pullback here. So this one gave no pullback. That one just went straight down. What about in here? I think this might have been the one that we looked at here, where you can see our white basis would have been right here at this level. Here's the high, here's the crossover right there, 50% drop. We covered this one right here as well, 50% pullback increase. There's two sweet spot trades right there. This was huge back up in here. This was a big one. On this one, on the shift, market gave no pullback until up here. So this was actually the first entry level up there before continuing. This is something that can happen. It can be a discrepancy in price. When you see that the line has barely moved and it pushes down like this after it has broken the white right here. So if you look at this, it broke the white level and then the market comes right back up and price moves a little bit. It gives a sell confirmation, but that's not an actual sell confirmation, just so you know. So if you took that, you would have taken a potential small win, or you might have taken a loss depending on how it played out for you. So you need to watch those. All right, on this one, let's see. This one confirmed and did a pullback later on, but that's not valid for anything we would be doing. This one right here, your entry would have been right there on that wick off of the basis, and it gave a hyper trader entry, which comes later on. This right here, I think we covered this one, but up here you have a high that pushes down, breaks the low. On this one, the market, this is pretty wild. Market comes back, your 50 is actually below the basis. I wouldn't be taking that. But this market, if you happen to take a sell in here at any point, stayed valid, did push down, stayed valid here, and the market did drop for lower lows. Takes nerve, but you can hit them. On this one, buy confirmation. So right in here, this was the level. It broke the level here. And how much of a pullback did it give from here to the break? It pulled right back to the 50. There's your sweet spot trade right there at the rejection, off to the upside. Another big win. Okay, in here, when this is a tough one because you don't really have any flat spots in here. These trades are very difficult to spot. You can see the discrepancies on the basis, but they're different. They're difficult to spot here. All right, how about this one? Market has made a low. Market breaks the white ray right here. This would have been a white ray, flat, push down, flat, breaks above it. You go from your low and you go up. Right here's your 50% entry for the market to rise. Dropped back down here. This is where I'm telling you, if you go break even, you will get stopped out sometimes, and then you will watch the market take off without you, and you will cry. You will cry, okay? You will. So from here, that entry right there stays valid. It never makes a lower low, never makes a lower low. These trades are so big. The trades are so big, and you're so close to your valid stop level that you can just keep that stop below the low, because by this point, this should have been the lowest point. The liquidity grab was right here. It already happened, and then it reversed. This is where you're looking for right here, okay? So it already happened. You didn't get in early. You waited. Then this happened, and then boom. Now you're looking for it right here. So you get in from here. You're looking for a 1 to 3. If it goes lower, you're out. A 1 to 3 occurred right there on this candle. Okay? So if at this point you're risking $1,000 and you're looking to make $3,000 on a $150K account, if you're playing aggressive, which I do love to play aggressive, If you're playing aggressive, you're looking for a 1 to 3 no matter what. It's just the amount of money that you're risking changes depending on your account size and your aggression level. Okay, so there's your 1 to 3 right there. This is more advanced. We'll cover this, but also barely again, that buy confirmation from the line barely moving. It's not actually a buy confirmation, just FYI. So you need to watch out for those. If it moves a tiny bit and goes flat and price gets back under it, you're bearish, basically. You're bearish again, like immediately bearish. Like mark up your line, 50% sweet spot, drop money. Okay, you can hit these trades all day long if you wish. Okay, ready? This one happens fast. This market here, there is a level right here from the previous support. Market closes below it right there. There's the break. See the break below? You go from the high, drag it down to the low. It happens in one candle here. You had a small window. Pull back right there. 50%. That's a fast one. That's a difficult to catch, but if you catch it, you made a lot of money. That's the difference right there. Okay? If I press the replay button here, you should be able to see it. This right here, because it has this right here, this was not flat long enough to show you this level. I can see the level because I look left and I see the support right here. So I see the support right here, and I see the market breaking the support. But again, this is more advanced. This would be a difficult one to spot. So this market eventually does break that low, but you can see the market's already confirmed, it's already moving, and it's no longer a valid for that initial entry. But this does give those pullbacks, which we'll cover. You'll learn about these pullbacks to the trend line on HyperTrader. Right now, you're just learning about the main entries and the sell confirmations and the way that trends flow. Right there, break of the white line. Market comes down, continues, goes lower here. So if you take that, you take a losing trade. Market goes lower, continues to go, continues to go, continues to go. Remember, one of the keys here is that the market, you may take losing trades, and you will, but they will be typically less than half of what your winning trades are, which is why your account is able to move forward, because you let your winners run and you cut your losers. And that is a very, very key component in trading. Okay? Let's take a look at a couple more. We'll just keep going through these. Okay, right here. Market breaks above the white ray. Probably somewhere around here, maybe a little higher. Right there. Buy confirmed and all. Again, if you go break even after this initial push, the market may still not actually be in the trend yet. You are early. You're early before anybody knows it's an uptrend. Any retail trader. The smart money knows, but the retail traders, they don't know yet, okay? So you're before the retail traders and you're with the smart money. But this market could still come lower and it stays valid, which is why I do not suggest that you go break even on these initial positions in the market, because you will get stopped out and you will cry because you will watch the market immediately turn around and go in your direction. Okay? Just like that. And you would miss out on this entire move. And again, just to reiterate my point on why this works so well and why you can take losses and still keep kicking the market's butt. Here's your 1 to 3 right here. Boom. Hits right there. 866 ticks in the market. So whatever you're risking, if it's $100, you're making $300. If you're risking $500, you're making $1,500. If you're risking $1,000, you're making $3,000. These trades that I'm showing you on the 1 minute time frame are large trades. They're big trades. okay? And it's not about the amount of ticks. The ticks don't matter. This is why this is dynamic, is because right now the market's very volatile. We're having huge 1,000 to 7,000 tick moves. It's unprecedented, right? Later on, it might only be 100 to 150 to 200 ticks. But it'll be relevant to where your low is and where your entry is, and you just adjust your contract size to reflect that. That's what matters. Your contract size does not stay the same all the time. It adjusts, which is also why I love brokers like TopStepX, because just like on here, what you can do is when you see these wicks right here, you could start at one position. You can drag your stop loss down below the low, and then I can add up until I'm at $1,000 risk. 7 contracts, okay? And then now we just let that 7 contracts run until we're at $3,000, which happens right there on that candle, okay? It's dynamic contract sizing, which we cover that in another video, but you're getting a refresher on this right now, or an early introduction to it, depending on where this is in the series, okay? All right, let's take a look at this bigger one. Okay, this one happened after the sell confirmed. So right here you have a larger level. Your white ray would be down here. Here's your top. Market makes a high, closes down below here. And then on this, it comes back up into this zone up in here and stays below. Actually, this one goes right off. Remember we were talking about sometimes they go off the basis? It came right back to that basis, which never changed. That basis never pointed down, so these stayed valid, and then it continues down. Okay, it made another low back down here off of that basis. So there's also a potential trade in there that you could take and secure profit on. This one, there's not going to be any ray there, so that's going to be a tough one. It's actually, there's a ray right here and it's kind of close together. So I don't think it actually gave a pullback entry of 50%. This closes over the white ray that would be right here without hitting the replay button. It never comes back to that level. Instead, it moves from the basis right here. Boom, drops from the basis. Okay, there's another example of how it comes down, comes back up, you're freaking out. It stops you at break even, and then the market goes on without you, and you sit there and cry because you missed out. And then you take a sloppy entry to get back in, and then it just starts the whole cycle downward. Some of you know what I'm talking about. All right. So there you go. That's just, again, repeat coverage of how this works. Again, where the market has broken. It's broken the previous level. Broken the previous white ray, breaks it, pulls back, and it comes back down to test either the basis, and it goes off of the basis, or 50% typically from the failure to make the low. So if it failed to make a low, much of the time you're going to see it come from that level right there. So 50% sweet spot right there, the market rejects, you enter, and then you're off to the races there for a 1 to 3 risk to reward trade in the market. Okay? And that is how the Pathfinder indicator works. It shows you nice bright blue candles for buying, nice bright red candles for the selling. It shows you the basis, which moves up and steps up with an uptrend. It shows you the basis, which steps down with a downtrend. Okay? And it also has the buy and sell confirmation, which occurs when the line begins to move in the opposite direction. So for here, it went flat. Instead of recovering, it goes to the downside. Okay? Here, same thing. It's going down, and then right here, it flips up and gives you a potential indicator that you might be moving to the upside. Okay? Here you can see the same thing. It's stepping up, and then it steps down, and the market moves down. Okay? Here's an exception where the market has moved down, finds a new basis here, but the market breaks it and goes into an uptrend, okay? So it's not like it's perfect all of the time. There's no such thing as perfection in trading. What there is high probability setups. And when you give yourself a high probability setup consistently, combined with a 1-to-2 or 1-to-3 risk reward ratio in the market for your trades, you are going to win in the markets over the long term, okay? So that is the Pathfinder indicator in a nutshell. Hope you enjoyed this video. Pathfinder Hyper Trader, which gives you additional entries, unlocks at level 4 in school. And so those videos and the farther educational videos that are more advanced will unlock there. But for the moment, what you can do, and I just want to show this to you real quick as a closeout. I'm going to show you the last 7 days here on the Pathfinder. You can see the market is selling here. You listen to it. This is after 9:30. Market drops, and if you went with it, you made a lot of money. Here, the market was buying. You probably already hit your target in this. If you sold, it gave some potential, flipped back to buying, gave the third largest move in the history of the stock market since World War II. Go back to the previous day. This is now Tuesday. Market was pushing up for a beautiful move. Market reverses, goes red. Market starts to drop for a huge gain on the day. This is why I say you can show up, take 1-to-2 trades, and even if you lose the first one, you can make money in the second one. So like for this example, if you took a sell right here and you got stopped out, you get back in on the pullback, you made a lot of money, okay? So there's opportunity in here. Even if you held, this market came up higher later on and you were able to get some more. You don't need to take every single signal, although every single signal does give opportunity for profit. It doesn't mean that you need to take everyone, because not everyone is going to be a banger of a trade, right? You just want to take 1-to-2 winning trades and be done. You want to try to hit your daily target and be done. Right here, this market said that it was buying. It flips right here, pushes down to selling, gives a little bit of a confirmation, gives a pullback to that same level, market drops off, you're done for the day. This is all on 1 minute. Back in here, this is now last Thursday. You can see buy confirmation here. Market pushes up. Maybe you make money, maybe you don't on that. Market comes back down. Right here, sell confirmation. Definitely some money involved in that trade right there. Especially after the market's already moving and it comes back to the basis and you use the basis as your entry. Your stop loss is not going to be way up here. You're looking for the market to continue to move from your basis. So your stop loss can be tighter. Nice buy moves right here. There's money involved in that one for sure. Buy confirmation here. There's money involved in that. So, I mean, every single one of these, you can see the market almost always comes back to that level and then gives moves to the downside or the upside. Okay? Day after day after day, you want to go back and study this. This one, buy confirmation, this market just crushes it from the buy confirmation. This was just big time right there. You're done. Okay, good move in the market. Again, back over here. Sell confirmation, you probably take a loss in here. Switch over, market confirms the buy, and you've got money back in your pocket. More than you lost. So not only do you get your money back, but you make money for the day on all of these positions. All of them, literally. All of them. Not only do you get your money back from your loss, but you make money. This market drops down on the sell confirmation here. Right here, turns around, goes to a buy confirmation, market rises for the rest of the day, targets hit. Sell confirmation in here, big drop. Okay, buy confirmation was here, you take a loss. Sell confirmation, you make all your money and then some. Easily a 1-to-3 risk reward trade, multiple times over and over again. Same thing in here. Market buys up, goes from selling to buying, nice big push. I mean, you can just see this day after day after day. Market drops on the sell, boom, right after 9:30, you're looking for your entries and you get those nice moves. Okay. Every once in a while, you'll get a difficult day, like this one right here. This one is a tough one. Market right here, you wouldn't touch anything in there, other than you'd probably take a sell right here. And depending on what you did, 200 and some ticks. Yep, so maybe you hit your target, maybe not, but you probably made money on that one. Market turns around here, gets back above that reversal level, gives you that confirmation. It's already been moving since that confirmation after this higher high right here. Pulls back, gives you an entry there, and you make your money for the day. So literally on every single day on 1 minute, it's giving you multiple entries in order for you to be able to get your bag on the daily, which we cover that in the market position sizing and risk management video. But you should be looking ultimately for 1 to 2 or 1 to 3 risk to reward trades. And you should be risking roughly no more, depending on how aggressive you are. If you want to stay under leveraged, you would risk no more than $500 per $150,000 account. If you're taking a $50K account, you might only risk $200 to $250. If your max stop for the day is $1,000 on a $50K account, maybe you only take 2 trades on the day and you give yourself 2 setups, and maybe you risk $500. Maybe if you're trading a $150K account and you want to be aggressive and you're like, I'm going to give myself 2 bullets in the chamber, and so I'm willing to risk, $1,500, or I'm willing to risk $1,000. I'll risk $2,000 on the day, which is what I'll often risk. Then you would only risk $1,000 per trade. Okay, so you adjust your contract sizing based on your risk tolerance, how aggressive you want to go, and your profit is based off of your risk to reward and not your monetary amount. But you may have a goal for the day that you want to hit. Make it a reasonable one, like on a 50K account, your goal would be $1,000 a day on a 50K account. Okay. You want to go from anywhere from 1 to 2% should be your goal. 1 to 2% should be your goal. So then you just manage accordingly that you would be able to hit that in 1 trade. So that way, if you take 1 trade and you've hit your goal, you're just done for the day. That is always, always, always the goal. This is like golf. The less we play, the better we do. It's the same thing. So that's the Pathfinder indicator. It shows you the direction, shows you the heat map with the candles, and it shows you the dynamic support and resistance levels in the market. By the way, these can be used as targets. So as a quick example, if you took a buy down in here, you could use this as a target right here. See how it rejects from this level? So once you get back up to that zone, boom, take your profit. Very simply put, okay? Don't overcomplicate it. Keep things simple always. And keep a smart head on your shoulders. Use wisdom. And I'll see you in the next video.